Good morning, everybody. This is the Tokyo FinTech podcast. I'm Norbert Gierke, and I'm here today with Alex Topaloski, who's the founder and CEO of Pulse. Hi, Alex. How are you?
Very well, Norbert. How are you?
I'm fine, thank you. So you're visiting Tokyo this week, not for the first time, but you have a very interesting story. You're born in Macedonia, and you're now living in Singapore with a few stops in between. So how did this all happen? And then with this brilliant Australian accent.
I think really, for me, Singapore is an incredible experience of living in this city at this time. But yeah, as you said, I was born in a country that now doesn't exist, Yugoslavia. I grew up, and for the first 11 years of my life, I spoke Macedonian and no English. Somewhere along the way, I learnt English. I lived in New Zealand and Australia. I went to school there, then moved to London and entered banking in London. Over the last 4 or 5 years, my mission really has been about building businesses in Asia in the FinTech domain. So it is a fantastic time to be in Singapore, and it's also incredible to be in Tokyo and see the way this city's changing.
You have a very traditional banking career on the outset. So what attracted you to that in the first place, and what made you leave it in the end?
Yeah, look, I think banking for me was a career that I didn't anticipate I would find so interesting. Like, I entered it quite young. I entered it when I was 21 years old at Deutsche Bank in London. It was the boom years before the GFC, and there was a lot of opportunity and a lot of money, and I couldn't believe how many different career paths within banking one can pursue and the growth opportunities that one can go down on. So I did enter in the investment banking route in London in 2005, and then very quickly sort of shifted in the retail banking space at ANZ. Into the strategy technology teams, and the last few years were spent working in the payments area.
So Deutsche Bank, and you see the news this week, what do you feel about that when you see that now basically the bank is almost no longer in existence?
Yeah, I mean, look, there's definitely an element of sadness, right? Because it was just such an incredible institution when I was part of it 12, 13 years ago, and a lot obviously has changed. So yeah, there is definitely an element of sadness, and probably a bit of a wake-up call, right? You know, like in the changes that need to happen within a financial institution that has been working quite well for decades.
When you joined ANZ, it was basically also at a time when the Australian banks didn't really get impacted that harshly by the financial crisis. In particular, ANZ had quite a bit of Asian expansion kind of following the crisis and taking advantage of maybe picking up some of the players who had to divest businesses. So even post-GFC, I had a pretty interesting role there in the strategy group, I imagine.
You're absolutely right, because when I joined ANZ and joined that strategy team, I was one of the analysts on the ground crunching the numbers around the Asia opportunity, around what are the strategic options for a Big Four Australian bank and its ability to grow within already a saturated market. The Australian economy wasn't impacted as badly as Europe and the US, and Australian banks actually came very strong out of the crisis. For me personally, that experience was a massive learning curve on multiple dimensions. The first dimension was around how to size markets and how to size opportunities from the outside. And I think that as a practice has really sort of served me well as an entrepreneur, because I think that is a really underrated competence in doing a lot of the planning upfront, because it's a real grind and really difficult to build a business, and sizing the market and sizing the opportunity upfront is very important. And I think my time at ANZ really trained me to do that, because there was a lot of discipline in looking at the revenue pools and the profitability of different segments in the market, given the mission at ANZ was around entering new spaces, like whether it's inside the wealth area that we spent a lot of time sort of mapping out the managed investments industry, or different segments in the across Asia markets. So really for me, it was an incredible experience in learning how to size opportunities, look at a lot of data and doing that up front and doing your planning. And then the second bit, which was sort of, I spent 5 or 6 years at ANZ, towards the latter part was in the payments area. And that was really a defining moment in the type of businesses that I ended up building when leaving banking, in the sense that I saw a lot of opportunities in payment space. I also realized for myself that I do like applying myself to complex problems. Payments is actually quite a complex industry with a lot of moving parts. It's very dynamic. And that's sort of when I initially left banking. That was always an area that was of interest to me. To be honest, at the start of my entrepreneurial journey, I didn't really understand exactly how I should, like, where should this company slot inside that payment space? And it took us a number of years to build a view and really learn about that market. So I would say one of the golden threads for me has been one of just persistently and consistently applying myself in understanding industries, markets and problems. And these things tend to take time. Like it tends to take a long time to sort of develop a deep view of what are the different moving parts that are happening in the industry and what are the opportunities.
That's very interesting. So if we kind of rewind and go back almost 10 years then, when you looked at the payment space for the first time, what did it look at the time? Because obviously it's like the very early days of the iPhone, and so we didn't think about having a bank in our pocket yet. What was kind of the strategy view 10 years ago on the payment space?
I first encountered the payment space from the shoes of a bank, thinking about its business. And it was actually really understanding payments. What does this mean? What does payments mean inside a bank? And you'd be surprised to learn how difficult of a question that is, to understand that 25 or 30% of a bank's business is the payments function. Because banks aren't built to capture the value of payments across their business units. They look at credit cards and transaction accounts as separate products. So the first was actually building a holistic view of the role of payments inside a bank, like inside the retail bank. That was sort of my focus. The second phase of that was really understand what are the opportunities and what are the threats. A lot of the technology change at that time, like I'm talking 2010, 2009, was, as you rightly said, it was on the radar. It hadn't happened. And it was really just making an assessment and a view. Somewhere along the way, I think I realized for myself that whilst I find this very interesting, I would want to be more on the team that looks at exploiting new opportunities as opposed to defending position that I really felt that technology was going to change. But at that time, I didn't really know exactly how. And in fact, I started really building a business around using geolocation data, which in my mind was always very connected to the payment stream because it told so much of the story of that customer in terms of their geolocation trail, what they did before the payment transaction and what they did after the payment transaction. And at that time, that technology really wasn't adopted and understood anywhere outside of the US. I spent a lot of time in the US and visiting other geolocation platforms in Silicon Valley in New York and really learning about how they're approaching the industry. And I think that really for me was the start. But importantly for me, I just kind of filed away that insight in terms of the connectivity between where I started, which is around learning about people's location trails. And it took me a good number of years to basically start tying that down to the payment experience.
We're getting then to your entrepreneurial journey, basically, which started 8 or 9 years ago and ended up what Pulse is today. So when you look at this, what are kind of the major milestones along the way of that journey, the pivotal moments of insight that led you down the path?
Having been on this journey for 8 or 9 years now, it really every year has felt like a completely different job. So it hasn't, for me, felt like a block of 8 years of doing the same thing. And in fact, every year for me has been completely different than the previous. And I think that's one of the things that I really enjoy. It's actually very seductive having a role that changes so fast and gives you so much growth opportunities. So I think from a personal growth perspective, it's been incredible year after year. It's certainly definitely challenging. Look, milestones are building the first bit of the platform and releasing that into the market and having people use it, right? And having like real customers. use it, and doing that with with a small, scrappy startup team and seeing that grow and the opportunities. And so I think
what was the first product then?
So the first product was around being able to personalize apps and websites around geolocation and a person's real-time location. At that time, it was incredible because it gave a user a completely different dimension if they interact with an app or a website in one location versus another. And previously to that, it was static, right? And you could personalize it around what's around them. And that was a good learning curve for us as well on what is the top data that you're able to collect and understand a bit more about a person's trail, and how do you then bind that to their online behavior. And really very quickly, one thing I've also learned is that the market gives you feedback all the time in terms of where the real opportunities are. And you have to be prepared that you're probably, you have to be humble enough to really listen to the market and what it's exactly telling you. What the market was telling us as a company was that the opportunities, the use cases, the applications of geolocation was in the loyalty space. Every type of organization we went and met, financial services, media, telecommunications, it was all around improving loyalty programs. And specifically, the use case was inevitably around, I have these offers and I really need to be a lot smarter with how I trigger these promotions and be a lot more personalized and targeted. And I feel one of my sort of personal beliefs that has shaped everything that I've done sort of since leaving the corporate world has been around making things more personalized and more relevant. I think we see enough stimulation from technology in terms of push notifications and different apps and so forth. So really it's about quieting the noise and having less, but having things that are more relevant to you and things that you can do in action, and having an incredible experience when you do want to do something, and simplifying that. But as we started working with loyalty programs, a lot of the clients would say to us, they're like, listen, like Alex, we love the platform. It really allows us to use geofencing and trigger the right experiences, and it's great for customers. And the response rates we're getting from consumers was a step change to anything that you could get through Google or Facebook, because it was just so relevant, right? But the problems inevitably for a lot of our partners and clients were, but I have really, really poor offers. I don't have anything worth really triggering a location-based push notification, because my process for how I develop these promotions and offers and how I work with my network of merchants is broken, and it is human-based, and I need an army of people that are going to go and negotiate these offers one by one, and I can only afford to do that with large merchants, so therefore the economics don't work out for me to be able to really do this with SME merchants, which is actually 70% of the market. And when we actually started learning and hearing about this meeting after meeting, and we realized that there is actually a deeper mission here, that geolocation really is one part of the solution, but really for us to fulfill our purpose and make a real impact, we did have to confront other problems that we didn't know existed at the start.
So now we built up lots of suspense and dropped lots of hints about what Pulse actually is. So maybe we'll explain that very succinctly wants to kind of break the suspense moment here.
Right. Okay. Look, essentially, my company, Pulse ID, is a platform that is built for merchants. Merchants, especially small and medium merchants. And the role of this platform is really to help these businesses accelerate sales, like accelerate revenue. Because running my own business, I know what's really important to a business owner. There are two things: making more sales and doing it in a more cost-effective way. And what we've identified is that businesses need a lot more help in the tools they use, digital tools they use in how they accelerate their sales and revenue. I think you see a lot of growth in companies like Uber Eats and Deliveroo and Foodpanda, because they are such a seamless revenue accelerating platform for a business. If it's a restaurant, all they have to do is plug into this platform and orders get shifted straight to the kitchen. And that is, it's insanely expensive for restaurants. It makes restaurants run unsustainably and it destroys a lot of businesses. But it goes back to the real need of people that start and run these businesses, which is, I need help on how to accelerate revenue and accelerate sales. And what is unique about our platform, which is called Catalyst, is that Catalyst partners with financial institutions and helps merchants to develop promotions and distribute them across multiple financial ecosystems. So across a network of mobile apps that are operated by neobanks and mobile wallets and banks and, like other payment channels, and really build an alternative for businesses to run much more effective marketing and promotions away from Facebook and away from Google, and providing an alternative to market themselves across a network of financial services organizations.
That's fascinating because obviously Japan, we have a bit of cashless payment wars going on currently. It's become very, very popular. Although Japan is still a very cash-loving country, the government has put out targets basically to double cashless adoption from 20% to 40% by 2025. And the rumors around giving a discount when we get the consumption tax increase in October if you pay cashless. And everybody likes a good deal, so you could assume if that all happens and falls in place, that we reach the 40% maybe way before 2025. But that's a market here. I think your home market in Singapore is also an abundance of kind of cashless payments app. And those are ultimately then, if I understood your explanation correctly right now, the distribution channel. So the offer that I get at this location based, I'm standing in front of a Starbucks and I get an offer for a latte. That comes through the payment app itself. It comes not directly from the merchant. Is that correct?
That's correct. So I think to build on a couple of points that you mentioned around the relationship between payments and loyalty, it's actually a lot more important now than it was 2 or 3 years ago. And I'll maybe just explain why. There is a sharp proliferation in the quantum of mobile wallets and banks and neobanks that are offering really easy ways for you to pay through your phone now. So I think in Singapore alone, there are 42 different mobile payment wallets that are operating right now. And so we're live in 5 markets, in Singapore, Philippines, Thailand, Hong Kong, and Australia. And in every market around ASEAN, there are dozens, right? There is another 42 in Malaysia and a lot more in Indonesia and Thailand and Cambodia and Vietnam and Philippines. So it's an incredibly busy and at times almost chaotic space right now. It's because there's never been more alternatives to help people pay. What we're finding, if you look at the data in terms of what moves market share, so between one mobile wallet to another, and how do these wallets really differentiate and acquire users? And by acquiring, I mean getting people onboarded onto your payment wallet, but then also retaining them and ensuring that they use it. It comes down to really 2 or 3 things, right? So there's really 2 or 3 things that consumers want out of their mobile wallets. The first is they want a secure experience. So they want to feel that they can trust transacting with that platform. The second, and actually what always comes as the most important element, is the payment experience. People don't want a clunky app where you need to tap 5 times and put in a 6-digit PIN to get to the point at which you can scan, and there is no time to do this at the point of sale. Like, it needs to happen very quickly. It needs to happen in a fraction of a second. And I think one of the big reasons why Alipay and WeChat Pay built that business and scaled very fast, because they had an incredible payment experience. Very quick, very fast, very smooth. But what is very interesting is that the payment experience is pretty much a hygiene factor now. Every app can have an identical payment experience now, because ultimately the payment experience, the real limits of the payment experience are set by the sensors of the phones that the app has access to. And every app has access to the exact same sensors on the exact same phones. So it makes it very easy for a bank to offer the same payment experience as Alipay or WeChat or FavePay or anyone, right? LinePay. Therefore, the payment experience is being commoditized and there's less differentiation across these payment wallets, which goes down to going, well, what are people going to? What is the thing that is going to drive people to shift? And it comes down to deals, offers, and discounts, because people are rational around their spending. They tend to think about what are the businesses that appreciate my business. That has awoken a real need for rethinking the loyalty model, because right now, every one of these 42 mobile wallets runs their own loyalty program, and they all understand why they really need a loyalty program, because it's an essential element of their business. However, the friction, the byproduct that was unintended, is the chaos that this unleashes for merchants, because these offers and promotions inevitably are sourced from these merchants. And whilst the merchant may have had some sort of a process that could cope with developing one offer with one credit card, how does this scale when all of a sudden the merchant has a line of people seeking offers from all 42 mobile wallets are approaching these merchants to develop offers? And this is what the heart of what is actually clogging up the entire payment system right now, that there isn't this orderly, well-managed marketplace that handles how a merchant can develop a promotion and distribute that across multiple mobile payment channels. And that's what Pulse ID does. That's what Catalyst does. It helps the merchant develop the right promotion, and then it algorithmically distributes that across a network.
So you're the payments platform's platformer. Your PQ, basically.
It's a marketplace, right? So I think we only play one role within that marketplace, right? To provide technology, provide governance, provide a way for a merchant to collaborate with a credit card scheme or a domestic payment network and a network of mobile wallets. So that's the role of the marketplace platform. But really, a marketplace is made up of multiple participants. So really, collaboration for us is a core part of our business. We cannot run our business alone, and we recognize that. So this is why it's important for people at Pulse ID and for me to go in and learn what people are doing, because we do have that collaboration ingrained within the way we work and understand really what is happening in a market like Japan or a market like Indonesia or Philippines or Australia and New Zealand. So I think that's actually one of the really fun bits of being in the company.
I mean, your pitch was perfect for payment apps, right? The benefits for the payment app of getting kind of a good inventory of campaigns and so on going. But what's the underlying commercial model? This campaign is ultimately originated by the merchant, so I assume the merchant for sure pays. Is anybody else paying? And who gets paid at the end of it? How do you get paid?
Yeah, look, such awesome questions. And it goes back to an earlier point around the complexity of the payment industry. There is never only one answer. So in reality, our partners operate multiple commercial models. The usual commercial model so far has been that the issuer pays, or the mobile wallet pays. This is the main catalyst for change, because it is not sustainable for the issuer or a new well-funded mobile wallet to always be footing 100% of these merchant discounts. They will burn through their VC cash. Bank will no longer see the ROI, especially given payment margins are collapsing and reducing, right? So the profitability of payments is decreasing. The model of the issuer pays has been something that's been in motion for decades. Like, loyalty is not a new game. It's just been done in a very closed, fragmented way. So that's one model. The other model that really we are really focusing on driving is a merchant-funded reward. That really is simple, because merchants spend money to accelerate sales. They call that marketing dollars. They spend it through media agencies. They spend it in traditional ways in advertising on TV, and increasingly more on digital. And 80% of digital marketing spend goes into Google and Facebook. And we really believe that the financial services industry has a role to play in how these businesses spend their marketing dollars and providing a smarter way for these merchants. So it's not just merchants. It's also brands. Large international companies, Mondelez, Coca-Cola, they have enormous need to get the word out. The second commercial model within our platform is one where a merchant or a brand pays. That's a very interesting one. Merchant-funded rewards isn't a new desire within the financial services industry. Financial services industry has, for many years, wanted to build ways where it could turn loyalty from a painful cost item into potentially a revenue stream. But it is something that you need to apply technology in a very deliberate and careful way, because if you don't do this as an automated, technology-driven solution, the economics don't work out. There's no ROI for the merchant, so they won't pay it, and then you end up back to the current model. So that's the second commercial model around the merchant and the brand pays. The third commercial model is, you have other payment networks that would at times subsidize these promotions to encourage use.
Yeah, I think there's enough people who have several payment apps on their phone simply because they're using the different benefits that come from it. So I use the first application to get my free movie tickets, the second to get my free coffee, and otherwise I'll pay with cash. So that doesn't really help the payment apps. I was thinking when you're talking about algorithmically distributing these campaigns, does that include an auction as well, or is it more like a configuration on the merchant side? Because the reason for the question is simply if you have attractive merchants and attractive campaigns that have value for the payment app, right? Arguably, they should shoulder a part of the cost, and then that makes the campaign cheaper for the merchant. So there's an interplay between the two parties in your ecosystem.
Look, absolutely right. So the mission is to have a really compelling offer for a customer, only so occasionally, that is hyper relevant, not annoying, and very useful. Right. So that's actually the mission, right? Ultimately, whichever way you approach that problem, it really has to come down to what people see.
And is that what you just said? Is that static, or is it also dynamically configured?
It has to be dynamic, right?
On the customer's behavior.
Yeah, like we are all so different. We all have a different geolocation trail in where we move and where we do commerce. We have different habits of online versus offline. We have multiple ways that we're consuming content, and we have multiple payment channels now. So you cannot build this as a static solution. There is no such a thing as like a rule of thumb anymore, right? So it has to be machine learning driven, it has to be driven by ongoing input and learn how consumers respond. So data science is a huge part of our business, and I only anticipate that to accelerate in building a platform that really simplifies this whole thing, simplifies it for the customer. So in terms of only occasionally seeing something that is super relevant and very easy for you to go in and redeem and complete. So we believe that space on the customer side, like loyalty and offers, will increasingly just become embedded inside the payment experience. People won't see them as different things. They'll just see them as something that is part of the payment transaction, and they will always be opting in and out, and there will always be penalizing entities that don't give a good experience in controlling how your data gets used and how they send you offers, and if they spam you, you just delete the app. And that's actually not a bad thing, right? Like it's a good thing for consumers to have that level of control, because it actually fuels the need for you to really do this properly through platforms like us. But the other piece of this really is not just about how that offer is sent to card holders and customers, but really how the merchant creates an offer. Because if you have an uncompelling offer, 1% off a $10 purchase, like if that's what the merchant offers, doesn't matter how you cut it. That isn't going to be something that a lot of consumers find relevant, right? So to really, the role of our platform is also to train merchants to create offers that people really love and people like redeeming, right? So that's where it's important to collaborate in understanding the shopping habits and the transaction histories and how people shop inside different types of merchants, and making a platform that automates the process of how merchants create an offer. And that's a really exciting space that is a sharp focus for Catalyst, because it just takes a lot of work, to be honest with you, to just develop a single promotion. Like there's a lot of decisions. You got to decide whether this should be a percentage or a dollar discount. You need to set a minimum transaction size. should this be 500 yen or 1,000 yen? How does a merchant really know? Like, should this be $10 off or 50 yen off? How is that going to influence the number of redemptions and price elasticity? How would a small merchant ever be able to competently answer those questions? Because their business is about running their business, running their shop. They do not have a platform today to really help them through those decisions. And yet, a fundamental part of growing that business, if you want more people, if you want people to keep coming, you need to be using technology, you need to be using data. So sorry, that's kind of like the long answer to a simple question.
And it is a complex ecosystem. That's what you mentioned right at the outset. With Catalyst, you struck a deal with Visa, which of course is a brilliant name to have on the client list. And then also from anecdotal evidence from other companies that have done deals with Visa or MasterCard, the due diligence process on you in getting to that deal seems to be more thorough than anything else on this planet. So having a clean bill of health kind of coming through this is very valuable too as well. But can you talk a bit about what that transaction means for your business going forward?
At the simplest level, the partnership with Visa allows us to open our platform, reach new markets faster, and do that with a scale that within an ecosystem that in Asia currently handles about $2.5 trillion of annual payment volumes. So that's for us been something that we're very proud and we're very happy to back that partnership. The other point that you make around the due diligence that goes to, say, securing that partnership is something that's very healthy for a fintech company to undergo. In asking difficult questions and having your technology stress tested, particularly in the payment space. Because dealing with people's money, dealing with people's payment credentials is a responsibility. And it's important for a young company to develop practices that respect that, especially in building a model that does scale across hundreds of millions of consumers and millions of merchants. There are simply no shortcuts in a lot of those things. It just actually takes time to embed those processes and test those processes, and you have to be careful with the way you go to market. And so there's a lot of those questions that you work through. And the great thing about partnering with Visa is having going through that journey with a great partner that is obviously such an incredible player in the payment space.
Wonderful. Let's talk a bit about kind of customer data, because this whole portfolio of payment apps that are out there where people are not tied into a single app, that means also that payment data is distributed across. And essentially every single payment app doesn't even have the full picture of where the customer is spending money. But you as a platformer for the platform kind of have that 360-degree view of what's happening, plus the location data. That's pretty powerful on once. And for once, it's the opportunity. The second is kind of the threat of what happens if that data gets compromised.
Yeah, look, you're right. I mean, the data on a customer is fragmented, especially when you move into an industry that is going through a phase of hyper competition. Lots of different platforms see one part of the puzzle. The good thing about Catalyst is that it is able to see different types of data. For example, payment platforms aren't all made equal. So some payment platforms collect a lot more data. So mobile wallets may also get access to the SKU level data in terms of the line items that people buy at Lawson's or a 7-Eleven, as opposed to just the transaction amount. So the type of insights, the way you can train the algorithms to provide personalization on like the offers and promotions is a step change. So us having the experience to work with different streams of and granularity of payment data makes a big difference for our own product development. Secondly, we also we're very experienced in also understanding the way people move, because sometimes you want to know when people went and they didn't make a purchase, right? For you to have an opportunity to change that next time around. So Geolocation is really that powerful technology that connects the offline movements of a customer with what they do inside that payment app. So we also have a lot of experience in understanding the movement patterns of customers and being able to apply our Trail platform to pick up frequent international travelers. So guys like me that go to KL every month versus people that tend to be university students. Or, there's a lot of patterns you can pick up just by actually understanding the way people move in the real world. The trick in that is, how do you do that to handle that really sensitive piece of information? Because person's real-time location is an insanely private piece of data. And doing that in a way that's firstly legal, doing that in a way that actually respects consumers and is fully transparent with how that data and information is used is, I think, where we stand apart. A lot of our clients and partners actually do not want to access and store their customers' real-time location. So that's the important insight that at the start of your journey as a business you probably didn't anticipate, and then you realize that a lot of the value you provide is giving the insights without them having to store the location data into their systems. That raises a whole range of red flags by their legal risk and compliance. So the geolocation piece is a really important element of that data story. And the third one is actually how people respond to loyalty offers and promotions. What are the type of things that they access? What part of the app do they use? Do they like location-based push notifications? Do they find them annoying? If they like them, how often do they want to be prompted? What type of deals? Is it food and beverage, or is it retail? And, or are there other channels that they prefer to consume? And what are the type of merchants that they respond well to? So I think that data story is fragmented. We don't see everything, obviously, but we do build the technology to be able to analyze multiple streams of that data.
So let's come back to Japan once more. So you had 5 countries. Japan wasn't on the list yet. When will it be on the list?
Oh, well, one of the really important things for a FinTech startup is having a very deliberate plan and having a lot of focus and discipline to execute on what you say that you're going to do to your investors and to your clients and to your people. So really, for us, it has been important to break ground and into the ASEAN region and grow and scale. So it's very pleasing that we're live in 5 markets and having our technology in 10 million devices. And I think at the moment we send about 4 million offers every month. Really having the ability to prove that, and now having the opportunity to learn of what is happening in Japan and what is happening in Tokyo, I think brings us now at an exciting phase of growth. So for us, Japan is now becoming an important market because it is a big market. As you said, there's a lot of need in terms of how people use payments in Japan, and there's a lot of activity. There's a lot of great companies in this space in Japan that are making and taking to market some pretty innovative solutions. We are now at a phase of really learning about what are prospective partners doing in this space and exploring ways that we can help and accelerate that journey.
Non-committal in terms of the timeline, which is a prudent approach for this market because things take a lot of time here.
I think
but the focus is there. Obviously.
Look, the one thing I think it goes back to kind of one of my earlier points. We really have a collaborative approach in how we enter markets, right? So it's important for us that we do this with the right partners. And so we are at that where we are looking at piecing together the partners that are going to launch the Catalyst marketplace in Japan, and actually also work with our existing partners because Japan is an important market for the broader payments ecosystem. Timings, look, I'm an impatient entrepreneur. Everything's running behind plan in terms of me setting the pace. But sometimes it is prudent to let things and plan things properly up front and then give yourself the ability to execute a lot faster.
Absolutely.
And I think that's the phase we're at. We really are at the planning phase. We're not live in Japan right now, but we're going to be live in Japan. And so that's what I can say on it.
Thank you. So for the last question, maybe started the journey like 10 years ago, looking at payments from a strategic perspective, and probably lots of what you anticipated at that time has come to fruition in some shape or form. So if you take the same 10-year view out from where we are today, in a market that, as you described it, is kind of characterized by hyper competition right now, kind of where will this be? Maybe not even 10 years out, but even 5 years out is very hard for me to predict. And what is the insider view on that?
Yeah, look, I would say 10 years ago, I didn't have very deep convictions on how it's I didn't have enough data. But it was more of a learning exercise and observing and talking and sort of. But I think now the trend is very clear. The profitability in payments is decreasing. More competition into any industry means that revenue margins get squeezed, whatever industry you're at. So I think a couple of years ago, the electronic payments revenue pool was $165 billion. It's a lot of money. That's a lot of money. So I do believe that profitability in payments is going to continue decreasing. Margins are going to come down. And that's actually going to make a lot of changes in the industry. And what that is going to, and in fact, all of this stuff is already happening, right? So it's all about developing, payment platforms developing new ways to monetize their relationships. And if you think about what relationships they have access to, effectively there is the customer and the merchant. So really it's about developing new services for merchants, new services for brands. It's about diversifying your revenue stream away from simply payment processing. And it's really about helping these businesses build smarter businesses, helping accelerate revenue, helping be more efficient in how you deliver that, automation into the workplace and so forth. And those themes are already in motion. Like you have markets like China that are moving at an incredible pace, where it just has such a vibrant set of tools that a merchant and a brand can now adopt. That also, by the way, has a payment function. But I think the industry is moving towards that model where it's going to be other revenue streams that need and other services that need to be offered to merchants and brands that will be really driving the profitability. And will be driving sort of the top line revenue growth for many of these payment platforms. So really, it is going to be a phase of a lot of change, and change is good.
Exciting space to be in, right? In many countries. That was outstanding concluding remarks. Thank you very much, Alex. It was a brilliant conversation. Really enjoyed this, and wishing you the best of luck in Japan, hopefully then as well next.
Thank you very much. Thank you for the opportunity.
Thank you all. This was the Tokyo FinTech podcast with Alex Topaloski, the founder and CEO of Pulse.